Hello and welcome to the Motilal Oswal studio. You're watching Your Trades on ET now with me, Shreyansi Singh and Ankita Saxena. And this is the show where we get you an update on the day gone by in trade. So let's begin with just that. Take a look at what the market really did. And Ankita, it was a largely tepid day coming in trade. Now, a tepid day, I suppose, in the kind of week that we've had is rather good news when you take a look at the Nifty. Not much of a move coming in as far as the Nifty is concerned. But when you take a look at the broader markets, of course, you did have a sharper cut coming in on the mid cap as well as the small cap. When you take a look at some of the other sectoral indices, you do have media that made it to the list of top losers. 4% thereabout downtick coming in for the media index, followed by realty as well as auto that were also on the back foot, and losses of anywhere between 1.5% to 2% coming in on both of those indices as well, followed by energy and PSU banks that were also on the back foot as well. On the flip side, of course, you did have a couple of sectors, 3 sectors in fact, that went home with just a tinge of green at the end of the day. Finance, metal as well as service are the sectors that I'm talking about. So largely that's the kind of handover that you have. Just a select few counters that held on to a tinge of green. But when you take a look at the list of losers, of course, you did have Ultratech Cement that made it to that particular list. Now, lots of news flow that we'll be discussing as well. But primarily, you do have the cables and wires segment foray coming in. That is something that we saw weighing on Ultratech Cement rather, and the rollout, of course, is going to be taking 3 to 5 years, and that is the word coming in from the management of KEI Industries. That stock as well was tanking in trade, taking it on the chin, if we can even call it that. Let's try and pull up KEI Industries. That's the stock that I'm talking about. There you have it, 21% downtick coming in for that particular counter, and it was down and out in trade as well throughout the course of the trading day. When you take a look at some of the other losers as well, you did have select few names from the auto pack making it to that list. So Hero Moto, M&M, Tata Motors, Bajaj Auto down anywhere between 1.5% to 2.5% thereabouts. So that's the kind of move that you saw coming in. Even some of the pharma majors were on the back foot just a tad bit. Cipla as well, 1.7% downtick coming in, and even Dr. Reddy's went home with a tinge of red. So largely, Ankita, that's the kind of handover that we have coming in. Lots of buzzers to keep track of.
Absolutely, Shreyansi. In fact, we've ended the February series on a dark note because the kind of month that we've seen. In fact, this is the 5th straight month of losses as far as Nifty is concerned. The last time we saw this huge losing streak was in 1996. In fact, we have ended the February series, and we'll see how the March series pans out. But first, a couple of other important news flows that government is also shortlisted top 5 bureaucrats who are set to be in the race for the next SEBI chief, as Madhvi Butch is set to say goodbye to as a SEBI chief on the 28th of February. The names of top candidates for the post include the current Economic Affairs Secretary Ajay Seth and SEBI's whole-time member Ashwini Bhatia, who are in the running for the big post. Also, a couple of other things that have happened today. We also had, of course, the looming threat of tariff trade. Trump has announced that he will be imposing a strict, 25% duty on European Union, and also the probe into the copper imports into the US is also likely to happen. So the looming threat of Trump's tariff trade continues to hover. Also, there's Jubilant FoodWorks that was in focus today, and it is on the back of the fact that Jubilant FoodWorks will hold its maiden analyst meet, and they will are sharing some ambitious targets for the next 3 years. They are eyeing an expansion of 700 odd new towns and so on. And so this is the first time that Jubilant FoodWorks will be holding the analyst meet, and everyone will be watching out for that, and a couple of other things. The clarity on M&A and insight on the journeys of poppies, and also the pizza competition, especially on offerings and prices. That's something that people will be watching out for. So Jubilant FoodWorks right before that was trading with cuts of 1.5%. So largely these are the top news flows that made headlines today. But let's move on and get perspective on the market. Let's get on board Lakshmikant Shukla, technical analyst, institutional research, Securities India. Hi Lakshmikant, good afternoon to you. Thank you so much for joining us today. Lakshmikant, First up, it was a tepid day in the market yet again. In fact, Nifty closed in the red for February series. In fact, we have broken below that 22,550 levels. What are the levels that you're watching out for? We did see Nifty Bank, though, outperforming, and it was trading above its previous range. Is the banking pack going to lead the recovery? What are the levels that you're watching out for the front line and for Bank Nifty?
Good afternoon, Ankita, and thank you for inviting me on your show. So I would like to start that from the that market opened the week with a significant decline, and subsequent recovery attempt proved futile, leaving the benchmark index confined to a trading range. Persistent struggle between buyers and sellers is evident, with sellers currently holding the upper hand. Technically, the levels of 22,450 to 22,400 support area, which is also placed near the mark of 20 month simple moving averages, so which is crucial for the Nifty. Now, its ability to withstand selling pressure will determine whether a rebound is feasible or if further losses are imminent. On the flip side, the levels of 22,670 to 22,720, where bearish gap has originated on Monday, could act as the strong resistance for the market, so which could hinder this potential upward move in the immediate future. Now, if Nifty breaches the levels of 22,450, then this existing weakness could intensify and we could see more downcuts toward the levels of 22,000 and then 21,800 levels. If we talk about Bank Nifty, so Bank Nifty is currently experiencing a recovery for the last 3 days. Daily chart reveals that it has formed bullish candle, and even if we look at the 3 days data where it's forming higher tops and higher bottom, so which is indicating that in the upcoming sessions Bank Nifty could outperform the benchmark index. And if Bank Nifty able to hold the support of 47,800, then we could see this pullback move could extend higher toward the levels of 49,650, where its upcoming resistance is seen.
Lakshmikant, for helping us understand what the setup then looks like, at least when the Bank Nifty then is concerned. But tell us about your picks that you have for our viewers as well. I believe there's a banking counter that makes it to that list as well.
If we look at the all over sectorial indices, then only Nifty Financial and Nifty Private Banks has seen some upside momentum. So we could see, even we look at the ratio chart of Nifty Financial Service and private banks, which we can compare with the benchmark index, they are also trending higher. So now these are all only two sectors which are shifting toward the positive trajectory. So we could expect outperformance in the near term by these two sectors. And even I have picked my two stocks from these two sectors also. So first one is Axis Bank. So Axis Bank has undergone a substantial correction around 30% from its peak of 1,340 without showing any immediate sign of recovery. But from last few days, it is started making a strong base near its previous support areas. And even if you look at the RSI chart, which is showing a positive crossover on the daily scale, so we could expect that Axis Bank could move higher. Even Axis Bank has formed cup and handle pattern on the daily chart, so we could expect upside breakout in Axis Bank. That's why we have shortlisted for taking long position. So we could buy this Axis Bank on a dip around 1,000 to 1,010 with the stop loss of 978 on the downside, and we could expect upside move toward the levels of 1,060. Second stock is from Nifty Financial Services, that is Shriram Finance. So this stock has given double bottom breakout on the daily chart, and after seeing short-term profit booking from its 200 DMA, this stock has jumped above its previous swing high of 595 with decent volume, and today it has also formed bullish belt hold candlestick pattern. So we could expect that this ongoing move will continue in Shriram Finance, and one can go long around the dip toward the levels of 595 to 600 and can expect upside move in this stock toward the levels of 640 with the stop loss of 580.
All right, Shriram Finance is one of your top picks. In fact, Shriram Finance was one of the top buzzers today on the back of that big RBI stimulus that came in. Thank you so much for taking the time out and joining us, Lakshmikant. And well, let's get you the word from the wise then. Harish Krishnan, who's the co-CIO and head equity Aditya Birla Sun Life AMC, believes that most of the froth is behind us and is more comfortable with the large caps over the broader market. Let's go across and listen into his take.
A lot of the froth which had got built in is kind of behind us. Thirdly, coming to valuations, I think from the large cap sense, we definitely are in a zone wherein valuations are now at average levels. But if I go down to small and micro caps, there still is a pocket of overvaluation. When you think of the construct that we are in a slowing economic growth, at least for the next 12 months. Yes, there is going to be some acceleration beyond that. We think, therefore, that there is greater comfort in the larger companies at this point of time is where we would be positioning ourselves.
All right, then that's the word coming in from the wise. But time for a very quick breather in the show. When we come back, more news and updates on the other side.
Welcome back. You tune in to Motilal Oswal Studio. Your Trades is the show you're watching, where we are giving you a roundup of how the trades fared today. But as we come to a close of the February series, let's take a look at how the March series is likely to be. In fact, if you look at the expiry for 6th of March, which is next week, let's see what's happening in the F&O. Let's see what the derivative diary looks like to give you an idea of how the markets could shape up. As far as Nifty is concerned, I can see a short build-up, and for Nifty Bank also there's a short build-up, which means there is an underlying bearish trend. As we can see, active calls for 6th of March, one is the call writings happening at 22,700 levels. The next level to watch out for is 22,800, which makes 22,800 as the level for resistance as far as Nifty is concerned. As for the active put calls are concerned, the put writing is happening at 22,500, and the next level to watch out for is 22,400. So that's largely how the derivative diary looks like for 6th of March expiry, or rather bearish trend that's building up for the next week as well, Shriyansi.
Yes, well, absolutely. And let's also take a look at Ultratech Cement, because no doubts for guessing that is the big story of the day. Ultratech Cement, of course, has announced its entry into the wires and cables segment. They're going to be investing 1,800 crore rupees to set up a plant in Gujarat over the next 2 years. Let's also go across to Ashesha, who's standing by with an update into this foray.
Well, yes, Ultratech Cement announced its foray into the wires and cables business with a capital expenditure of about 1,800 crores, which will be done over a period of next 2 years, and they are looking to set up their plant in Bharuch, Gujarat. This will be done by December 2026, and on the back of this news that came in, a whole host of brokerage houses also came out with their reports. First up, let's talk about CLSA, where they say that for wires and cables, customer base might be the same for Ultratech Cement and the business that they are looking to enter into, but channels of sales and distribution will be different, so it will not be as easy as the company thinks it will be. They say it has a good revenue potential. It could generate 4 to 5 times revenue with EBITDA margins in the range of 11 to 13%, and they expect Ultratech Cement to focus more on wires business as compared to cables business going forward. Jefferies, meanwhile, also came out with a report where they believe that any knee-jerk reaction in the stock will be a buying opportunity, and the stock did decline nearly 2.5 to 3% in trade today. Wires and cables, they believe, is a low margin business. It's a high working capital business, but they say return on capital employed is also very high, and that of course is a positive on account of the capital expenditure that the company is doing. Nuvama, meanwhile, believes that the industry impact of intensifying competition could be limited, and that Ultratech Cement's foray will constitute less than 5% of the total market size over the next 3 to 4 years. Citi, meanwhile, says that they could generate revenues of about 1,200 crores, which will be 14% of their total revenue by FY27. So brokerage houses had divided view, but the main consensus view was that it will not be easy, although their customer base might be same, but the distribution and sales channel might be different, and hence expansion plans will something that the channel will be keenly awaited. But yes, all in all, Ultratech Cement was in focus on account of this news flow that came in.
All right, big mover in trade today on the back of that news flow, even though it was reeling under selling pressure today. But with that, it's a wrap on this edition of Your Trades. Shriyansi and I will take your leave. Thank you so much for tuning in.